Right, let's have a look at a revaluation. But before we look at a revaluation, I want to remind you of a normal set of accounts. So the statement of profit and loss and the other comprehensive income. Okay, remember those headings? So you start with revenue, take off cost of sales, and that equals gross profit. Then you take off your expenses, because that's why it's called gross profit, because it's gross of the expenses. And the expenses are normally got two headings. They're all included in these two headings: admin expenses and distribution expenses. So now you've got your profit before tax, 500. So not surprisingly, next is tax. And then you've got your final profit after tax, which is normally what we call profit for the year. Now, on the statement of financial position, you start off with your assets. So longer term ones, non-current, and current ones, less than a year. So your total assets are 1,400. Then you've got your equity, so the amount of shares you've issued, 100, and the amount of profits you've made, 400. So what you owe the owners is 500, but you do owe other people, and they're your current liabilities and your long-term liabilities like loans, and your total liabilities are 900. Now, I want you to notice that the SFP always balances. Your total assets equals your total equity plus your total liabilities. Okay, so far, so good. Now, if this, and I'm presuming it was, the first year of operation, what has actually happened is that profit after tax of 400 has found its way in to retained earnings, okay, if it was the first year. So you've debited the statement of profit and loss, which is all those figures in the statement of profit and loss there, which comes to 400. You've taken all of that out and put it in to retained earnings. Okay, so actually your statement of profit and loss should look like that. Okay, where the SFP is cumulative, but the statement of profit and loss now has got 0 in it because you've cleared it all out and you've put it to retained earnings. But obviously, when you prepare a set of accounts, you put all those figures in, and you know the person reading the accounts understands that the retained earnings includes that 400, and actually the statement of profit and loss next year will all be at 0, and you'll start again. Okay, I'm telling you that for a reason, as you'll see later. Now, remember, this is called the statement of profit and loss and OCI. We've ignored OCI. Where does that go? It goes at the bottom here, after profit after tax. And the main thing that goes in here are what we call revaluations. So your non-current assets, one of your non-current assets may be a piece of property. You've revalued, you've followed the revaluation policy. You don't have to, but let's say that you have. You've revalued it to its fair value, and that means an extra 100. You put that gain on revaluation to other comprehensive income, because it's not something that you do on an operating basis, is it? That's not what you do. It's just that you have followed the revaluation policy, so you put it separately in the OCI. So far, so good. Debit asset then 100. Credit, gain on PPE revaluation, which is in OCI, 100. And you're happy, or so you think. Your total comprehensive income, by the way, then now would be your profit for the year, 400, plus your OCI. So your total comprehensive income is what we call it. So that's your normal income and your other comprehensive income. Your total comprehensive is 500. But look, we've got a problem. The SFP is no longer balancing, is it? I've got an extra 100 over there, okay? Which is why I explained to you before. Can you remember I explained to you, look, the profit after tax actually gets cleared off into retained earnings. Well, the same happens for the other comprehensive income, not surprisingly. So how do I clear that out? How do I take that 100 out and put it to the revaluation reserve, which is an amount in equity? How do I do it? Well, I debit it to get rid of it, get rid of that 100, and then I will credit my revaluation reserve with that 100. And I've done it. So the gain on PPE revaluation in the OCI will have 0 in it now, okay? But obviously we show it as having things in, otherwise it wouldn't make much sense. And that's that. That's how you deal with it. So let's have a reminder of the double entry that we did. To put it in, we debited asset 100 and we credited our OCI 100. Then we said, yeah, but you need to clear out the OCI in the end, don't you? So yeah, you say you do. Yeah, afterwards you would debit OCI and you'd credit your evaluation reserve, okay? So you can see there is a bit of a shortcut because those two cancel each other out, so it would just be debit asset, credit revaluation reserve. But in reality, it's all going through the OCI.